All right, what's happening, speculators? Let's fire up the Futures Fanatic live stream for the afternoon of Wednesday, January 14th, 2026. Hope you all had a good trading session thus far. I was debating whether I was even going to come on and stream just because there's just a lot of opportunity. Things are moving really, really quickly, and I got a bunch of things being copied and things. So, once again, I've been sort of messing around with this Bitcoin, making money, losing money. It was actually long and short today. So we'll take a look at that. Before we get started, just want to remind everybody the presentation is for educational purposes only. Opinions expressed are going to be this guy on the mic. Got to remember that all trades presented should be considered hypothetical and should not be expected to be replicated in a live trading account. So it's going to be kind of a replay of yesterday with this Bitcoin going up and making some session highs, just hitting 98,150. So I am down in this account today, gave back about half of what I had yesterday. It's actually up a little bit more. The net liquidation value, once you log in, doesn't update because all the integrations with TradingView from all the brokers are all bad. I think the balance is like 40. Who cares? Whatever. My Kerpos right here is long one remaining NASDAQ. Finally worked my way into profit there, but I've been trading around a 3 and 4 lot here in the Bitcoin market. If you wanted to look at Bitcoin, it's right here. And I got another, I'll have a 4 lot on if we pop all the way up to the +2s. And yeah, I'm going to wait for 96,600s down here to cover this in. So we have an extreme turn sell that came in there. So kind of a look there. Probably should be taking this NASDAQ off before VWAP, but made money on these last ones, so we're going to leave that alone. Over here on Funny Money Land, it's been a pretty good day. A little bit of a mixed bag. Going to look to get long again on a pullback here. I have just one left in these accounts right here, and then also trading the same position in my funded futures. And I'll be looking for the same level, a touch of VWAP here, so we can just watch this right here. But really what's been shitty is this. So I'm short, long NASDAQ, short Bitcoin. It's kind of what the positions I've been in most of the session, especially when Bitcoin just, when the NASDAQ just dropped to like 25,474s. And then there was a little news item or right before I came on, I'm sure you guys saw some wackadoos drop and pop in the NASDAQ. I thought maybe the tariff-related news had come back out, but not the case. Not the case. So anyhow, I don't know which one you guys want to watch. I'll toggle back and forth between this short Bitcoin position and this long NASDAQ. On this long NASDAQ, if I hadn't already so I don't know if you can see over here a bunch of exits on some longs. I had a bit of a 4 lot on. I'd run a sell stop here. You don't need to let it come all the way back down to hit target, but if you're going to hit that final target, as I teach and trade on in my room all the time, it's a concept of campaigning around price. Once you have a profitable position, it makes it a lot easier, especially if you're using micros, of course. This is all contingent on using micros. If you're trading smaller accounts and you were trying to trade 3 or 4 lots this way with minis, you just get run over. I'm here every day just to remind everybody that if you are mathematically having some success in accounts under 20 or 30,000 real dollars, not phony dollars. So if you're trading a $50,000 or $100,000 or $150,000 prop account and you have a $5,000 or $6,000 or $7,000 balance in it and you're trading minis, it's not a matter of if, it's just when you will blow up. There's mathematically, it is impossible. Okay, let me say this again. It is mathematically impossible. A couple little news items that are happening in futures that might be interesting to some folks. I saw that the CME finally is going to adjust the margin requirements for precious metals, silver, platinum, palladium, gold, of course. Let me just pop one in right here. This is not really a level, but it's enough of a pullback. Get that right there. There we go. They're going to adjust them from dollar-based to a percentage of notional, which is what it should have always been. That's essentially the CMA's way of saying, okay, these precious metals are getting a little out of control, and we need to ratchet them in. So that's what they're saying there. That's what they're saying. All right, I'm going to grab some here and some of the actual prop programs.
Order filled.
Here we go.
Order submitted.
All right, one for picture and sound. We're okay, right? Or you guys would have told me. You can hear me. Gonna get a one in there for picture and sound. All right, and then we can come over here to this micro Bitcoin and take another one off. I'm gonna scale out here. Let me take a look. I got too many trades happening. I'm in a lot of live markets here too. Yeah, so we need to scale out here and here.
Order submitted.
Every time I'm doing this, everybody, I'm buying the bid. So on Bitcoin, you could definitely miss the trades, but more often than not, you're going to get massive price improvement. So let me explain this again. There's a number of clips on my YouTube channel where I talk through this. If you are short and you want price improvement, this is quite literal in funny dollars. I'm going to save you millions of dollars in price improvement over the course of your career if you just do this. If you're short, only hit the buy bid button. Okay? If you're short, hit the buy bid button and you want to cover. If you are long and you want to exit a long, hit the sell ask. If you wanted to get long here, hit the buy bid, not market. Okay? Especially in prop programs, there's almost no time that you ever need to use the market button unless you're trading over on Project X and things break all the time apparently. All right, what is the question? Hi, do you have any experience with the trade copier in TopStep X? Yeah, it's great. I think it's great. I've heard about I'm not trading at TopStep anymore. I had some XFAs for a while, confirmed that they fixed their model, but then in the last couple of weeks and since December, I think they've really screwed up their reputation. This is a true rug pull, okay? A lot of you guys don't know what the definition of scam is and what the definition of a rug pull is. What happened at prop shops, not a rug pull. It sucks. Poorly communicated. Way, way, way too many changes going on there, but they didn't rug pull anything. It's not a rug pull, okay? A rug pull is what happened at TopStep, where they knowingly go out there and sell their technology to about 25 different prop firms and then 6 months later say, oh, just kidding. Sorry, you can't have this platform anymore. So in December, apparently lots of trouble and problems at TopStep. But when I have used Project X, TopStep X, I thought their copier was very, very good. So that's my experience with it. Well, the market gods must have heard me because the moment we started here, I started the stream, things calmed down a teeny bit, which is nice. I was like, what in the world is going on? All right, I'm going to hit this here. Hit this here.
Order filled. Order filled.
Don't get me wrong. There's definitely rug pulls, and it's a term that I think came about mostly from. I think it came about from crypto, the crypto world. Wow, there's a lot of hello icons there. Hello. All right. Why do you prefer Renko bars? So a couple things with Renko bars, and I've mentioned this before. There's a decent amount of moving parts to understand with everything with Renkos. I was fortunate about 15 plus years ago, maybe even a little more at this point, to meet a guy named Roger Felton, an OG in the trading education space. and also his developer named Rod, like me. And together there was a collaboration. We came up with these bars that are now used by just about everybody. And you can only run these on platforms that allow you to get access to tick data. Okay, so for instance, on TradingView, you can't have a bar that looks like this because if you select the Renkos, they're going to be time-based Renkos and they won't have a tick offset, so you can't configure them to look like this. But the Renko bar that you're seeing on here, you can get it on Quant Tower, you can get it on Atas, you can get it on Sierra, you can get it on Ninja, you can get it on Tickblaze. It's built into Tickblaze. It's built into now some other platforms as well. So you can get this Renko in a variety of different places. Hold on a second. I need to cover a few things. Look, I don't know how in the world I went green on some of this stuff, but I did. So let me just let me hit that. Let me hit this. Okay, so 283. All right, there we go. Let's get a little bit bigger here.
Order submitted.
All right, so back to Renkos, and I'll get to why I like them in a moment. You need a configurable Renko, all right, in order to see what you're seeing here on the screen. In terms of why I like them is they're based on tick data, and you get just more information to look at. So if you eventually do some back testing and figure out which setting you like, on the NASDAQ here I have a 16 by 4, which means that's 16 ticks by 4 ticks. That means that every 4 points, because there's 4 ticks to each NASDAQ point, I'll get a new bar forming. Okay? And then for a reversal, I need to have a 4 tick reversal or a 1 point in order for it to reverse. Now, on these Renkos, you're going to see that I have swing levels here, and these are why I like the swing levels. Okay? The length of the swing level depends on the amount of the swing from a particular level. So in other words, the further this goes until it comes back up and makes a higher high, or comes back to this level, the longer this will be. Okay. One of the things that's useful now that we live in the day of AI, which is a whole lot easier to get some generally decent answers, especially on things like math and indicators and stuff like that, is if you ever want to know the logic behind a pivot or a swing indicator or anything like that, just ask ChatGPT. It's way faster than what Google used to do, and then you'd have to go to a blog and you have to read someone who writes and describes it. It will just tell you the theory and logic and everything behind the math of how certain indicators work. So the Renkos will give you these 13, I have them set as 13 period swings. You're not going to see that on minute time-based bars. You can put a swing level on there, but you have to adjust it quite a bit. So let's get to the second point on the Renkos. I find them easier to sort of manage price. Manage a trade. And then the next reason is they do provide visual price patterns that are unique to these types of bars. I have a whole free course. It's called the Futures Fanatic Foundation course. It's absolutely free. You can get over on my website. And hold on a second here.
Order filled.
Getting out of some Bitcoin shorts. So you can get it over on my website. I do not have any position in the Dow Jones right now. The Dow Jones was a great trade today, though. Really good. Ideally, you guys made some money on the Dow Jones today.
Order filled.
All right, I'm going to take another one here. Remember, buying the bid. So that doesn't mean I get an instant fill. Okay.
Order filled.
And then this is this 303 account or 300 account is the live account.
Order
God dang it, maximum position size. Some of the prop programs on micro Bitcoin only allow a certain amount of contracts, which is actually pretty cool. So, because the margin is pretty intense. So, you can trade micro Bitcoin at pretty much everywhere except for, I think you can't trade it at Prop Shop. You can't trade it at Take Profit. But there's a lot of places where you can definitely trade it. 40. What is going on here? Oh, that's it. All right, I'm going to hit this, hit this, hit this, and hit this.
Order filled.
There we go. All right. I don't think this has come in enough for me to do anything with it here. No. I'm holding for much lower prices, and I'm fine to add another one if it pops back up there. Okay, so finishing my thoughts on the Renkos. They're going to give you your own visual price pattern. They're not available on all platforms, especially things like TradingView and TradingView. They're going to give you a lot more granularity to manage the trade, and they're going to get you some swing levels, which I like to look at. Now, this is really important, okay? If you're using the stay in your lane and you are using the volatility bands and you're trading on a 1 minute chart, which you shouldn't, or a 3 minute, which you shouldn't, you might use maybe a 5. You're going to see that the band levels are very, very different because VWAP is volume weighted average price. That's always going to be calculated based on the price of VWAP. But the time-based bars will produce different levels because they have to do with the open, high, low, close of the bar. So if you want something close to what the Renkos look like over here, I would use a 5 minute bar. That's what I use over here is a 5 minute bar. So if we were to go and compare though, for instance, +2s on the 5 minute bar for the NASDAQ, for the Bitcoin market right now is 98,460. If we went up here, you can say it's pretty darn close. But if you were using a 1 minute bar over here on TradingView, you're going to get different levels for your bands. Now, here's the thing. The source of truth is fine for either one. Just know that your level will be different. And the vast majority of my back testing was done with time-based bars until about 11 years ago. And ever since then, we've been using tick bars and range bars. So we don't use time-based bars. For stay in your lane, we use them over here only for the range trader, because the range trader is based on a volume profile, which sort of comes from the pits and the TPOs, which is time price opportunity charts, and that's always been done in 30-minute increments.
Order filled.
Yeah, that's pretty good.
Order filled.
Yeah, this is I'm out of that one.
Order filled. Order submitted.
Can we make a run for VWAP just above, right at 600, 25.6? That would be a nice level to get to. Very nice.
Order filled. Order filled. Order submitted.
All right. Any questions over here? Try talking about a ram. Thank you. Yes, probably not the best move from Top Step. With Renko, you up the granularity of the bars to only make changes at significant change. Yeah, significant. Do you use Renkos for both your entries and exits?
Order filled.
I trade on, let's just say yes. I always don't know how to answer those things because I don't even use charts for most of my trading, but that's fine. What's up, Rod? Hey, quick one. What's the Renko bar config for MBT? I use a 11 by 2. So I use an 11 by 2. All right, so we got through all the questions. Go Dow. Nice move by the let me see here. I'm going to take target on my funded futures at VWAP here. And then let's watch this. This will be the most exciting over here, I think. I'm probably going to drag it into price, everybody. No, I'm not. Here we go. 1, 2, 3. Come on. We need 3 more ticks, 2 more ticks. Points, actually, not ticks, but come on, baby. Boom. Who's the best ever? Are we the best ever? It's hard to be humble when you're as great as I am. All right, this one I'm going to hold. Hold! Mostly because that account's still down. I don't know how in the world that's possible. How is that possible?
Order filled. Order canceled.
Anyone long?
Order canceled.
Anyone long? Nazi still? Crude oil, great trade-off, -2. Yeah, I'm not really watching crude oil that much. On crude oil, I also use like an 11 by 2, sometimes a 10 by 1. Have you ever seen what the Dow looks like on a 10 by 1? It's kind of cool. Waiting for VWAP, got it. When the day is considered outside, when you stop fading the market and start following the trend. Well, on an outside day, with the exception of outside day up, on an outside day down, we definitely want to be looking to buy. Okay, so let's take a look at the because the difference is pretty substantial. Let me get rid of these things over here, and I'll bring the Dow Jones over. Okay, so let me bring like the Dow over here for a second. So this might be a little difficult to see. Let me just make sure we can see it on there. Yeah, okay. So this is the prior session low here, is right here. So all of this action that we were trading in here is considered outside day down. It would be considered a bear continuation pattern below T line outside day down. And on extreme moves to -2, there goes the Nazi. Keep going, baby. On extreme moves to -2, you'd be looking to potentially buy. Opposite on up days, you want to tend to stay off of. So a lot of this is contingent on understanding range and volatility, which is not something I can really just teach here on a stream. But if you come into my room, we discuss this all the time, and you can grab my ebook over there. We talk about the missing component in a lot of people's trading, which is not looking at what the overall range is, what the volatility is, what the expected move is. You hear volatility, no one understands it. They look at the VIX, and the VIX is useless for day trading futures. It's somewhat useful if you're actually trading SPX or SPY options, but it's really not that. It's the at the money puts and calls. Who cares, right? But you can measure volatility as a percentage of range and use something like the ATR that will tell you what the range is over the last 5 to 7 days. And then you make your decisions based on that. So the question comes frequently around, when do you decide to do this when it's trending? Well, here's the problem. The Dow Jones is not trending. It's on both sides of the T line. It went up, it went up, it went down, it went up, it went down. You should make a ton of money when you learn mean reversion in here, okay? And when they say markets will trend more than they don't or whatever, it all is time frame dependent. If you go down to a small enough time frame, there's no trend at all. It's total chaos. Every tick is chaos. Every tick is random. So the first and most important thing to do is to really, really define what you mean by a trend day and when you start to do something or don't do something. What I teach is you make decisions based on your daily risk budget, the first and most important thing. You could push buttons like a drunk monkey and have no idea what you're doing. And if you have the discipline to just close your account at any loss that is at or near 10% of your starting account balance for the session, you will be way ahead of the game. Way ahead of the game. So anyhow, on this outside day down, this is what we would call a bid zone that we would draw here, just connecting these two prior session lows. Okay. And here's how simple I can make this. You buy in here, okay? You just buy in here. Now, but Rod, it went down. It went down another 100 points. Remember, this is 50 cents a point, right? 50 cents a point. Can you handle 50 cents a point? Maybe if it was 3 contracts, it's $1.50 a point. So you just buy with reckless abandon here, okay? You do not short with reckless abandon up here when it gets outside this level, because shorting is hard and shorting will make you go broke. Not all the time. You got to learn how to go both ways, if you know what I mean. The Greeks couldn't have been totally wrong. I admire beauty in all forms. All right. But what's happening here is when we get into this area, we're getting long in here. And then we're managing risk. So if you got long right in here and you had a $150 daily risk budget, you probably would have hit the close button down here, and that sucks, and you would have been done. But you'd still be way ahead of it. Eventually, you'll learn how to campaign against around price, and you would have been long and take some off, and long and take some off, and then, oh, butthole pucker time. Okay, I'm already, I'm down $100 on this trade, but I'm already up $200 on the day, so whatever. And then you can buy S1, you can buy here. Now, as this is going on, you can also be referencing what's happening on your volatility bands. I teach stay in your lane because it provides a heck of a lot more levels and ways to learn how to campaign around price. But if I had my way, I would rather have people just trade 15-minute and 30-minute charts and not look at lower time frames. But if we only did that, it would bore you the heck. It would bore you to death. I'd be resting an order right here.
Order submitted.
And during my trade room this morning, here's the open. We get one fill, make a bunch of money, and then get another fill, and then make a bunch of money, and then rest it here again. But the problem is, while you wait for each of these I don't know what we do. We just sit and twiddle our thumbs. Or we can be over here on stay in your lane, which is, I'm actually going to get short here.
Submitted.
As I look at it. So that account is down $600. God, Bitcoin right back up, huh? What you gonna do? And speaking of, this would be a short right here.
Order submitted.
And this would be a short right here at the prior session's POC.
Order submitted.
So again, in the trade room, you'll learn all these levels. Does it come right away? Do people get confused between looking at this chart and looking at this chart initially? Yeah, you can.
Order filled.
Okay.
Order submitted.
Because now we're in the offer zone, so you just short. You don't have to, but I mean, the other thing is any short of the Dow Jones today is a with trend trade on the higher time frame, right? Because price is below the T line. So I mean, you could just lay into as many contracts as you want.
Order filled. Order submitted.
Put
Order submitted.
there's a POC level right here, so we take profit there and we take profit here.
Order submitted.
Now be careful doing what I'm doing, because in some firms, if they have a correlation problem, I'm hoping that goes away really soon, and I'm hearing it will. All right, so I went on a long tangent there. Rod, how do you handle volatility shifts like high? So a couple ways. So the question is, how you handle volatility shifts. Well, first of all, we're not really getting very many. We've had if you just measure the ATR on the S&P, it's 60. It'll expand a little bit today because the range today is much larger than 60. If you want to know the amount of range today is 80 points against an ATR of 60, so it's a decent amount. Let me just. All right, I'm going to take one here. Then we'll take one when it heads back down. NASDAQ got up to 630s. So anyway, back to handling range expansion or volatility. When it's low, trade bigger. When it gets a little bigger, trade smaller. I hate to, but I'm telling you right now, even though we're getting a lot of nice two-way, and at one point the NASDAQ was down nearly 2% today, and that feels like a lot. First of all, don't trade the NASDAQ until you're ready, right? Just trade the Dow. The Dow was perfect today. So take the NASDAQ off your screen and don't trade it, because usually a lot of the problems are dealing with instruments that you can't control on a risk-adjusted basis until you're ready. So just trade the Dow Jones. Today it's a thing of beauty. Right now, as we're talking, it's going out of the offer zone where you would start to initiate shorts, down to this yellow line here where you take one off, and then the next target is VWAP. Should you trade with stops? Yes, of course. But eventually they can truly be portfolio-based risk. In other words, what are you up and down in that trade or in that session? And you can make decisions based on that. Because you can come into my room or come into this trade room here and see I will never have a stop unless it's a trailing buy stop or a trailing sell stop, because I don't need it, because we're properly sized and we have high probability areas. And if it doesn't work, then you just hit the close button. I know that people want to make this a lot more complicated than it is, and you think that there has to be something. But there is a magic bullet. There is. It's called your daily risk budget, and just never exceeding it. Oh, Bitcoin. Come on in. Make me look like a champ, or go higher and give me another contract. Whatever you want to do. Whatever you want to do. All right, so Dow coming in a little bit. I'll go ahead and rest some orders up here in case we get one more little pop. God darn it. Ugh. That was an error because I put in a sell stop. This is a limit, right? Okay. So it's 75.69. I lost $3 there on an error. All right, let's look at the NASDAQ as it comes in a little bit. Resting some orders down there. All right, another target hit. Anyone short the Dow Jones here with me? $100 on a daily risk budget is going to be really tough. You're going to need to eventually expand that. I have a love-hate relationship with the Russell, but we use the same charts, same analysis. So you can trade anything you'd like. Can I explain what market value is in futures? I don't know what that means, so I can't explain it. Market value. All right, let's buy another one here.
Filled.
See if we can get back up to VWAP.
Order submitted. Order submitted. Order filled. Order filled. Order filled. Order filled. Order submitted.
All right, we're approaching VWAP on the Dow Jones, so you would cover shorts here. I would not get long. You could get long in the bid zone. Just play it from zone to zone. It's the best thing to do there.
Order submitted. Order submitted. Order submitted. Order filled. Order submitted.
Okay, we're going to have our market on close orders in
Order
just a moment.
submitted.
See what ends up happening.
Order submitted.
So a little pop, little drop, not a whole lot of reaction. When does mean reversion not work? Like, how do you know when to stay away or trade light? Discussed all the things. So the best thing to do, again, is grab my ebook. I can answer them in here sometimes, but please grab my ebook. If you have the time, come into the trade room. You'll understand all the filters and factors that you want to think about when it comes to how to read markets and understand when they truly are trending. But the simplest answer is once you understand volatility and range, you'll get a better sense of the probabilities of how much price momentum, strength, whatever you want to call it, pressure is going to be required to get outside of standard deviations. And the answer is the more range that's been put in for the session relative to So let me give you an example. If right now the 7-day ATR on the ES is 60 points, we've traded 80 points of range. It is very unlikely that -2 or +2, two standard deviations from VWAP, will be breached. If it's breached, it's going to be not by much. So does that make sense, everybody? Volatility and volume, the two things that matter. You overlay those two things. Nice bounce for the Dow Jones off of VWAP.
Order filled. Order filled. Order filled.
Okay, so
Order submitted.
I'm short the NASDAQ now. Sorry, short the Dow Jones. Looking for a retest back of VWAP. Maybe it happens, maybe it doesn't. Let's see. How much cushion should we have for trading one E-mini in our live account? I recommend, even though I don't recommend anything, look both ways for crossing the street. Don't eat yellow snow. If you knew the difference between good advice and bad advice, you wouldn't. But a guideline that I would suggest is at least the initial and maintenance margin from the CME. So for the NQ, that's around $33,000. For the ES, I think it's around 20-something thousand now. Another reason to learn how to trade treasuries, because the maintenance margin for the ZN is $2,000. $2,000 for the ZN. So if you sell puts at 112, you want to sell 10 of them, you just need $20,000. Because the maintenance margin for the future option is the same as it is for the underlying. All right, go Nazi. Go Nazi, it's your birthday. All right, I'm just going to take one right here. See if we maybe get back up there.
Order filled. Order filled.
Dow Jones popping back up into the offer zone. Little nice skittishness here.
Order filled.
What time do you stop taking new trades? You could watch the stream from yesterday, where I started with something called the power of quitting. There's no time that you stop taking new trades. You simply just whatever you're. So I would suggest going and watching the stream from yesterday. I spent about 10 minutes going through a article I wrote about the power of quitting, knowing when to stop when you're ahead, because when to stop when you're losing or have an unprofitable day is very clear. I discuss that every 10 minutes of every stream, right? It's your daily risk budget, 10% of your starting account value. And this is for smaller accounts, okay? If you have $1 million, I would not recommend risking $100,000 in any given trading session, right? So we're talking about these silly prop programs. Yeah, prop firms require closure at the end of each day. Yes, you should just be flat right around the cash close, like in 3 or 4 minutes. If you want to stick around for a little bit after that, there used to be a time where it was just wacky. You go till 4:15 Eastern, and then they would close for 15 minutes, and then they open up again for a half an hour, and then they close again at 5. They did away with that a while ago, thank goodness. So now it just trades all the way up until 5 p.m. Eastern. Then we close for 1 hour. The risk budget is 10% of your account value. If you consider that your max drawdown, that's what's so hilarious, right? About the way the props have misinformed people. Your max drawdown in prop land is 100% of your account value. Here, deposit $2,500 of your own money and risk the entire thing while you learn how to trade. Oh, and by the way, we're giving you $50,000 or $25,000. You guys all know but for some reason, a lot of you wouldn't pay $100 or $200 for $2,500. You pay $99, including the activation fee. What platform is this? This is NinjaTrader, and this is TradingView. NinjaTrader and TradingView. So in the real world, I get to go home short this Bitcoin, which is going higher. So I'm gonna hold it through a little bit more torture.
Order filled. Order filled.
Strong, nice close for just about everything. Dow Jones popped up a little bit there to the 370s.
Order filled. Order filled. Order filled. Order filled. Order filled.
All right, I'm just getting flat most everything here.
Order filled.
All right, I'll see if there's any more questions, and that'll do it for today. Kind of a mixed bag for me here, if you care about the funny money stuff. So
Connection lost.
this is a non-PA that I'm working on, and anyway, But overall, on the accounts that matter, pretty decent day. A little bit of red and green happens sometimes. All right. That's correct. Risk $200 per day if you got a 2K account. There you go. So I'm using AMP futures for my live account. The main margin is 36,000. The intraday margin is 1,000. Yes. Whatever the maintenance margin is, the fact that AMP gives you and NinjaTrader gives you and a bunch of others give you day trader margin, it's just crack to blow your account in the real world. So do not do that. Okay. All right, everybody, that'll be it for today. Thank you very much. Stay green, trade like a minute. It really does help if you hit the like button. I really appreciate it. Turn on the bell notification. Share this with anybody they think might benefit from it. And we'll see you tomorrow. If you want to learn more about TDG or anything we do, there's an ebook that you can grab in the description down below. We're also running a special. You can join the group for 3 months for $249. It'll be the best $250 you ever spend. Nothing to cancel. No need to continue after that. Although if you left our group after 3 months and all the money and fun you'd be having, I think you're crazy, but you could. And then you get lifetime access to our Discord as well as the indicators that we have over on TradingView. That'll be it. Stay green, trade like a minute. Thanks. Be good. Bye-bye.